The ANZ Bank's latest attempt to justify its go-it-alone policy on interest rates has not gone down well with the small business community. With the RBA indicating it's ready to cut rates next month, the ANZ's Australian boss has been arguing the case for the big banks to keep lifting their charges. Andrew Robertson reports.
ANZ has independently lifted its variable lending rates twice since it very publicly broke away from the Reserve Bank's interest rate cycle last December. Now the head of ANZ's Australian operations has used the Fairfax Press to explain why. According to Phil Chronican, our funding costs are up 18 basis points over the past 6 months, while our variable interest rates have risen by 12 basis points. In other words, profit margins on variable rate loans are being reduced. It's a view with which the Australian Centre for Financial Studies has some sympathy.
The banks are currently rolling over a lot of the funding that they obtained under the government guarantee scheme introduced in late 2008. And also in deposit markets, and this is good news for depositors. There's been much more competition for funds and the banks are passing that on to their borrowers.
But like many bank watchers, Professor Davis believes those competitive forces are weak, allowing pricing behaviour that's absent in many other industries.
I think all of them are working towards a particular target return on equity, which is, I think, higher than investors actually demand, given the risk profile of the banks.
Which is a bonanza for bank shareholders, but for businesses facing increasingly higher borrowing costs, it's a different story.
It doesn't help you as you go through your business planning for the rest of the day to know that the banks can do whatever they want, whenever they want, and that nobody's around to make sure that the rest of the economy doesn't suffer as a result of it.
However, while rising bank charges outside the Reserve Bank cycle make life harder for small businesses in particular, it's not their biggest complaint. According to the ANZ website, a business mortgage loan comes with an interest rate of more than 9%. Its personal mortgage rate is 7.5%. Peter Strong says there's no justification for the rate differential.
So if someone's starting up a good IT-based business, why should they be judged as risky as somebody who's in bricks and mortar retail in an area that's suffering? So I think they need to apply a better measuring device to small business. We're all different, and using the same formula across 2.5 million people won't work.
On the other side of the country in Perth, John Cummings runs his supermarket in suburban Duncraig. He says higher lending rates are only half of a double whammy for small business.
Banks have come to us on a regular basis and said, I'm sorry, the rules have changed. We no longer lend money to small business like we did 2 or 3 years ago. If you haven't got brick and mortar security, basically we don't want to know you.
Which, according to John Cumming, means instead of making it easier to do business, banks in many cases are making life tougher.
If you suck confidence out of small business people, why would they invest in that? The ongoing effect of a stop of investment in small business is, I would have thought that it would be catastrophic to the overall economy of Australia.
The Reserve Bank Board meets to consider interest rates next Tuesday. There's no guarantee ANZ or any of the other banks will pass on any rate cut in full.